Alright, we ready? Yeah. Alright, we ready. Where the fuck is my dog? What's up, y'all? It's Quant Warren coming back at y'all. Just wanted to wish all of y'all a good trading week for starters. You know what I'm saying? Everybody that you know what I'm saying, that follow me, that's on my page, that's on my website, that check out my stuff and my blogs and all that, my posts, Reddit, all that, you know what I'm saying, that fuck with me. I appreciate y'all, you know what I'm saying. Trading is often a lonely journey, you know what I'm saying. It's a very niche industry, you know, and so sometimes it gets lonely, you know. I got a blessing because I got a good team of people around me, a good amount of the times, a decent amount of the times, that can you know, make sure that I keep my head on straight. But I did want to let y'all know something, because I know I promised y'all that I was going to speak to y'all about ramping up on your positions this week. You know what I'm saying? And I got an important meetup, you know what I'm saying, this weekend. So decided to make the video a little bit early. You know, Quantum 2.0 about to launch, so pushing that real heavy, and got some meetings with you know what I'm saying. So I got to deal with that this weekend. So we'll make the video early. You know, and yeah, that's basically pretty much, you know what I mean. We're gonna make the video early, so get it out of the way. I wanted to first talk about trading psychology with you guys, because that's especially important when it comes to ramping up on your positions. I know a lot of you guys, you know, everybody want to make a lot of money and everything. That's why we trade. That's cool, you know what I mean? And that's why I started trading way back in 2008, right around the housing bubble burst, around that time, right before the great financial crisis and all that shit, right before the Dodd-Frank Act, and then they started suing all the international brokers, and you know, so now we get stuck with just the U.S. regulated brokers or the unregulated brokers that bypass, you know what I'm saying, the regulatory bodies in the United States, and then they get to scamming sometimes. You know, I know a lot of y'all in the U.S. have had issues with regard to stuff like that. I want to talk to you guys about that. I want to talk to you guys about trading psychology. I want to talk to you guys about ramping up on trades. They're all actually interconnected, and I'm going to, you know what I'm saying, break them all down for y'all right now. So for one, I'm sorry for my appearance. I don't usually be, you know what I'm saying, dressed like this, but as I said, you know what I'm saying, we getting ready for the official launch of 2.0. So, you know, me and my team, we there's a little bit of prep work involved in that. I'll just put it like that. So anyways, about first, let me just go ahead and hit the brokers real quick. You know, if you guys are serious about trading, and you guys are serious about it for the long haul, don't go with no unregulated broker. You know what I mean? Facts. Because I'm gonna just tell you like this, like it's all well and good when y'all start out and y'all trading a few $100s, a few $1,000s, you know, goofy shit like that. When y'all start talking about real money, And if y'all stay the course and stay consistent, eventually you will get there. Some faster than others, but y'all should all get there. You know, provided you stay consistent, you stay disciplined, you stay patient, you stay a warrior trader. You know what I'm saying? Which is the doctrine that I teach, the people that listen to me. You know what I'm saying? Like, it's just the same thing. Like, shout out to my niggas in ground control, you know what I'm saying? Hashtag ground control. My warriors, my MMA fighters, you know what I'm saying? My brothers and shit out in Baltimore, you know what I mean? You gotta stay consistent, you gotta put in the hard work, you know what I mean? You don't see the rewards at first. Sometimes you get banged up, you know, bad, multiple times back to back before you ever start to see returns. And that's not MMA specific. That's not trading specific. That's just anything that you want to do is going to take hard work. Period. Anything that's worth it, I should say. You know what I mean? For me, I struggled for a long time. You know, a long time, and so I can speak on all that with certainty. You know, it's a lot of times that I questioned whether to give up with trading and all of that, you know, because it's, you know, for somebody like me, see, I'm not gonna toot my horn, but I'm a pretty smart dude. I don't gotta try too hard academically. So when I first started trading and I started getting my head bust because I jumped out there like most of y'all probably did, without getting the proper knowledge, you know what I'm saying? It was kind of like I was dumbfounded, like, huh? What's going on? Can I mean, can somebody explain this to me? You know, this is, you know what I'm saying? I'm motherfucking honors graduate, honors college. I don't have to work hard. I don't have to study hard. People come to me. What is going on? And that's the mentality that I've had for my whole life, not just college, high school. Like, that's just my mother put me, you know what I'm saying, put that in me from young, you know what I mean? So and I've been blessed to have that intelligence. So when I started off with the trading, it was confusing to me, and I think it's probably confusing to a lot of y'all sometimes too, but you know what I mean? And it doesn't get a ton easier, but it does get easier though, you know what I'm saying? Especially when you fall into a routine. Then once you fall into a routine of consistency, then it becomes easier to manage the emotional swings that are just inherent in trading, just in general, right? So I wanted to put that out there for y'all. With regard to the brokers, y'all don't need no broker that's 500 to 1 leverage, 1,000 to 1, like all that type stuff that y'all be thinking about doing. And you know, all of that is tied in with the psychology. It's all tied in with the instant gratification. It's all tied in with the gambling mentality. It actually you know, takes away from your trading in the long run, because, and if you listen to me, you will know, you know, you gotta give your space, you gotta give your trades space to breathe. Trading is not a thing where it's a profession, it's a business. Like, it's not something where you come in and get the biggest amount of leverage and put an account together and then put the biggest trade on and, you know, try and put the smallest stop loss and the biggest take profit and get rich overnight. Like, that's not real, bro. Facts. You can make big trades, yeah. You know, I'm sure most people have had 200% weeks, 300% week, it's like return, as far as return, you know what I'm saying? Like, and way more. You know what I mean? That's that's not abnormal. Even but with I'm talking about with 50 to 1 leverage though. With 500 to 1 leverage, you basically on a suicide mission. And I'm keep it a band, like, because for one, once you start getting serious, like, you're not gonna be able to just readily jump that money out that brokerage firm, telling y'all, because they not connected to banks. They don't have a regulatory infrastructure in place that's keeping them in line, and they dealing with money. And money, you know what I'm saying, the love of money is the root of all evil. Believe that. Like, y'all gotta start to let go, you know what I mean? And I have trouble with that too, because I equate success with money, you know what I'm saying? And so to me, the more money you have, the more successful you are. And I benchmark myself against others in my industry. And so, you know, that's partially good and that's partially bad, and that's not really the topic of this conversation. But I wanted to say that you guys don't need 500 to 1 leverage to make 100, 200% per in a week, in a month. You know what I'm saying? Like, what you guys really need to be focused on is getting in the right pairs. And that's why I always, y'all hear me talk about, or if you listen, you know what I'm saying, when I talk on the forums and all of that, I talk about getting on the right pairs. Get on the yen pairs, pound yen. They call pound yen the monster for a reason. You know, you can make so much money. I done made so much money just off a whim with pound yen. Shit that you would never be able to do on dollar CAD, euro dollar, all that goofy shit. Like, that's starter pack shit. Like, that's like shit that you do when you first, you know what I'm saying? I don't want to put it like jump off the porch, but when you first get into trading, you know what I mean? Like, that's basic, you know. And people talk about, oh yeah, well, certain pairs, they're super volatile and they're unpredictable, and well, yeah, but that's trading, and you got to be able to navigate that. That's part of learning. That's part of experience. You know what I'm saying? Is being able to navigate that, those hurdles that y'all see as hurdles right now. Because once you be able to navigate it successfully, you won't see it as a hurdle no more. You'll start to see them as opportunities to capitalize on. You see what I'm saying? So it get different. It's not always going to be looked at as a hurdle. You know what I mean? And this is real, this is true build, and I'm telling y'all some real shit right now. Y'all don't need no 500 to 1 leverage. And if you got 500 to 1 leverage, you know what I'm saying, you may do great, you know what I'm saying, for a while. But I've been doing this joint for over 10 years. You know what I'm saying? I done told y'all, my mentor has managed funds. I'm talking about $1 million, multi-million dollar, multi-billion dollar hedge funds across the world. This ain't no like this oh yeah, like you I'm trading 500 leverage. I just made a big trade. I made $3,000. I made $10,000. Or I made $100,000. Like, man, there are people that trade, regular people, you know what I'm saying, $100,000 a clip. You know what I'm saying? Some of my good men that I follow, that I deal with, you know what I'm saying, that I talk to, that I get support from in my community, in my industry, $200,000-$300,000. $200,000-$300,000 a clip. They don't even think about 500 to 1. Now, granted, some of them been trading for a decent amount of time, you know, 5 years, 10 years, 15 years. But at the end of the day, I guarantee you, if they had been on some 500 to 1 leverage shit and been utilizing it, they wouldn't be there right now, where they at right now. Facts. You know what I'm saying? It's just not, it's not possible to trade with that much risk. I mean, you trading, like, let's say you start off with a $10,000 account and you fully leverage on a position. You know what I'm saying? Like, even on let's say like you start off with a $10,000 account. You put on, like, let's say something goofy like $400,000 worth of a position. How long do you think you're going to be able to last? All it's going to take is a few ticks against you, and a lot of the times that's the reason why y'all guys put them stop losses so close to them resistance and them stop and them support levels. Y'all get knocked out because of shit like that, because y'all want to keep the stop loss tight, because you don't want to lose, because the position is too big. If you would switch the position and make it reasonable, you can have a stop loss that's also reasonable. But y'all trading in a way whereas though I'm gonna be real, is that y'all trading too big for your account size, and y'all trading with too tight a stop loss because y'all are trading too big and you're trying to limit the risk. So it's a double negative you got. Bow bow. You ain't no bullshit. And it took me a long time because I used to be in that same cycle. See, you know what I'm saying? Trading is easy. The mental is hard. You know, my mentor used to tell me I could teach someone how to trade in a week or two. That's nothing. But what about your mind frame? What about the patience when the trade is hanging over for a week, 2 weeks, and you just waiting? Can you deal with that to reach your motherfucking take profit? If a trade go against you, can you stick to your rules and let that joint go before it become catastrophic? Shit like that is what take the time. It's not the learning the technical part. Like, that shit is easy for most, if not all, of the currency pairs that are out there. It's everything is cyclical. Sorry. It just like every economy has a business cycle. Every currency has a business cycle, so to speak. You know what I'm saying? Like, everything is just repeating itself. It's nothing new. There's no newness to the market. You know, once you learn how to trade, you can trade, period. Like, that's facts. Like, things may switch up a little bit depending on the regime, you know what I'm saying, the specific regime that they're in, or the specific state of the business cycle. You know how a business cycle in an economy, you know, you may go from rapid growth to kind of like a plateau to a little bit of a recession, to a little bit of a depression if the central bankers don't, you know what I'm saying, moderate well enough. And then it goes around, and it's just it's a circle. It's a cycle. It happens all the time, you know. And it's the same thing with trading. Trading, you know, like, it has its phases. It may be trending, or then it may plateau and start ranging, and then it may start to reverse its trend, and then it may start to trend again, or it may start to tighten up into a consolidation because the market's anticipating something big, and then it'll break out and then start trending again. I mean, it's all the same shit. You see what I'm saying? It's nothing new. Once you know how, it's like riding a bike. Once you learn how to ride a bike, you good. You know what I'm saying? You don't have to relearn it. It sticks because it's just that. Same thing with trading, guys. People a lot of times try to overcomplicate shit, and that's where y'all get fucked up. You know what I'm saying? So I just wanted to put that, you know what I'm saying, stay simple. You know what I'm saying? I had this saying, keep it stupid simple. Keep it simple. Y'all gonna make the money that y'all wanna make, I guarantee it. I promise you. If you keep it simple, keep it consistent, and stick to your motherfucking guns. Stick to the patience, stick to the discipline, stick to the consistency, stick to your plan. That's it. And then time will go by, and the next thing you turn around, you be like, damn, bro, my shit real live. Like, I'm real big dog now. What the fuck? I was just working at Walmart. Now I'm in a Lambo. See what I'm saying? That's the type of shit that, and it happened, bro. I'm telling you, I know a lot of people, a lot of, man, and y'all, and higher up y'all go, y'all start dealing with higher up people as well, bro. Like, it's not no, like, once in a lifetime, like, flash in the pan type shit. Like, nah. You just gotta approach it right. So that's the first thing that I wanted to put out there for y'all, you know what I'm saying? Because anybody, I believe, anybody that can get their mind right can get rich as fuck off trading, period. It's too much money. It's too much money on the table. It's just, that's just really what it is. You know what I mean? And so I wanted to put that, y'all don't need 500 to 1 leverage. You know what I'm saying? My mentor didn't use no leverage, 0. You see what I'm saying? And it's different because he institutional, so it's on a different type level, but still, 50 to 1 where we got it, that's reasonable. Even using 50 to 1, I'm sure y'all know that 1 or 2 nice heavy trades can blow y'all shit apart. You know what I'm saying? On God. Yeah. So don't think you need to go to 500 a month. Don't think you need to go to an unregulated broker. What you need to do is put your head down, buckle up, and get ready and run this race, because it's a marathon, you know what I'm saying? And one step in front of the other, y'all gonna get there. I'm telling y'all. And that's my word to y'all. All right, so that's the first thing I wanted to say. The next thing that I wanted to say with regard to ramping up on trades, you know what I'm saying? There is a safe way to pyramid, you know what I'm saying? Time-tested way. And you know how y'all see these support and resistance levels get penetrated, and y'all want to jump straight in and add to your position and all. Don't do that. You know, wait, because what's going to end up happening, because see, the market is not just what y'all see on the screen. It's big, it's large orders behind these price levels, y'all. You know what I'm saying? Like, just because a price breaks through a resistance, you know how much pressure it's going up against? It could be going up against $1 trillion worth of pressure. And you don't even know the gravity of what y'all dealing with. It could be going up against $5 trillion worth of straight pressure. It's not going to just float through a major resistance level like it's all willy-nilly. You know what it would take for that to happen? It would take something dramatic. Like, it would take everyone starting to really reposition themselves simultaneously almost. It would have to be some dramatic shift in the fundamentals for a price to just slide straight through a multi-month, multi-year, even sometimes a multi-week resistance or support, because there's a lot of money on them levels. The price has to work its way through that. Now, see, where y'all get caught with regard to that is that y'all end up being what's part of what's getting worked through, and you don't want to do that. And what I mean by that is, let's say prices, the resistance is here. Y'all may get in, see a setup down here, the price break, and it close above here. And it may go up a little bit, dance around. 9 times out of 10, that bitch going, and it's gonna come right back below that. And sometimes it may even go below your initial entry before then going back up. These are the things that y'all gotta pay attention to. Just because a price break through a level don't give you the green light to start adding super amounts of weight to y'all's positions. Because what y'all are doing, for one, a lot of the times I see people when they do this, first and foremost, you don't want to ever make your trade top heavy. That's for one. Because the further a trend goes, the weaker it inherently gets. You know, a trend is the strongest, the absolute strongest at its inception. Always remember that. And that is the reason why the greatest traders in the world, when they pyramid up. It's called pyramiding for a reason. Because your biggest position is at the bottom. And you incrementally move up. And the top got the smallest position. So that way, when the trends start to fold up, it's not gonna kill your whole trade. Y'all do, a lot of the times I see people, I'm not gonna say everybody, but a lot of times I see people, they do an inverse pyramid. So they may place a position, they're like, oh yeah, I'm making some money. Yeah, put a bigger position on. And then the market may go in their favor again. Then they put a big goofy position on. They're like, man, fuck that shit, I'm gonna make a whole rack of money. Then the joint turn. But it may only turn a quarter of the way. But that quarter of the way then killed your entire trade, because the top of your trade is so heavy that the loss from that is it overtake everything that happened down here. All this profit down here is now, that's it. That shit over with. And then y'all get scared, and then you want to close out the trade. The trade may still be good, but y'all want to get scared and close the trade out. And then you take a loss on a trade where you should have been taking a healthy profit. Don't do that, guys. You know what I'm saying? It's called pyramiding. So pyramid, make it a pyramid. You know what I mean? And when you do it, make sure that all liquidity grabs have been completed before you add at new levels. You don't just add at a level as soon as it break, because when it break, it gotta go through a lot of orders in the opposing direction, and 9 times out of 10, it's gonna come back through that level. It's gonna liquidity grab for all the people that are quote breakout traders, and they jump in as soon as the price peaks above a level. If it especially this how they get y'all too, they'll close it above the level on like an hour 1 time frame. They'll close that bitch, bloop, sometimes even on an hour 4, close it above the level, make y'all really think. Because I know, you know what I'm saying, because basic knowledge that people get a lot of the times is that, you know, you want to wait until the close. Well, yeah, sometimes, but you got to put shit in context, because a lot of the times they will use that same thing against y'all, and when it close up there, they know that y'all are now going to start jumping in. They'll rip that bitch. Man, I guarantee you, in a few hours, that bitch will be so far down past that level, you'll be like, what the fuck happened? God damn, what happened? It was just above. Well, yeah. But you did what you did, and you did it too soon. And the market has to get liquidity to move through opposing forces. You know what I'm saying? It's kind of like they go into battle. You know what I mean? And you come up against a certain level, and then now you outnumbered. So now you got double back real quick. Go call in the troops. Hey guys, we gotta get the, yeah. But instead of y'all being, you know what I'm saying, what run through the opposing force, y'all end up being casualties of the pressure from the opposing force. You don't want to do that. And the way that you bypass that, be patient. You see that joint break through, Cool, let it break through. Give it a few hours. Let Europe come in. Let Asia come in. See what it do. A lot of the times, Asia is the best time to add to a position. I want to get that to y'all too. 5 o'clock close. When New York closed at 5 o'clock, and then Asia, like before Asia really start coming in, in Sydney, Australia, and all of that, like right around 5:05, 5:10, 5:30, right when the spreads start to close back up, right before 6 o'clock, you can really see, okay, I can get a position here. Because a lot of times what will end up happening is the market will gap in the opposite direction that it's intending to go. And the reason why is because the pressure up top, once New York closes, now they close all their positions. See, institutions don't typically leave positions hanging over the night, over the weekend. That's a retail trader practice for the most part, all right? When you get hired, you will see that. Like, they don't even be playing that. Like, by end of day, y'all got to be out. That's how they carry it. You see what I'm saying? Like, so, and sometimes at 4:45, they even will literally close you out if you're not already out. And there's no game. You see what I'm saying? Because we're talking about serious money at that point. So any gaps, any type of black swan events, they can't deal with it. They can't act on it because the market is now closed, but it is still affecting their position. See what I'm saying? So when you see that, a lot of times you'll see that gap. You know what I'm saying? Look at that gap. A lot of the times you may see the bid and the ask spread out real wide, or you might see it straight just gap down a few pips, maybe like 10, 15, whatever. But then you'll see the bid and the ask spread out, but you'll see that motherfucking bid hang at that level. That's a key indicator. When that bid hang up at that level where it was trending up at, but the ask is all down here, best believe 9 times out of 10, and if it gapped down, but the bid is still up here, unless something has shifted, 9 times out of 10, when it closes that spread, it's going to close that spread that way, and it's going that way. And if you can position yourself to the point where you can get in with a spread that's tolerable to you, whatever that may be for your risk preference, but as early as possible, right after New York closes. I'm not talking about literally right after, because you're going to catch a dumb, goofy spread. It's going to go down. Then you're going to be looking stupid because you're going to be in drawdown for no reason. Wait till the spread gets to something close to normal, but not all the way to normal, because by the time it's all the way to normal, the price is already now in movement. See what I'm saying? So now you late to the party. And what always ends up happening, guys, and this is a fact, is that when Europe comes in at 2, 3, 4 in the morning, they're gonna pull that price straight back down where Asia started it off at. And I say that to y'all because that's why it's important to get in as soon as that spread gets tolerable. You want to be in. If you're looking to hold and you see a nice developing long-term trend and you want to get in, and you know what I'm saying, though, that is an optimal time to get in because the market has totally reset at that point. You know what I'm saying? And if you get in with Asia, one or two things is going to happen through the next day. One, Asia going to do a quick little fake out around 8, 9 o'clock. Then they're going to pull the price back in its intended direction. But their fake outs, you can see them joints coming a mile away most of the times. you'll be good to go as long as you follow in the fundamentals or you follow in the trend and you know what's going on and you have a plan, I should say, not even that you have a plan. If you know for one reason or another the traded the trend, the price is supposed to be going in one direction or another, it's easy to then spot their fake outs because they usually stop, at those significant psychological 00 levels. Like, let's say for instance, you might see the price, it's supposed to go down, but it might stop at the 15. It may go up to 16, 20. But if you know, okay, hey, this 15 area and that 5 pip buffer right there, when prices get to stopping around a 15 level, it's because that's a cap, guys. That's a cap. I'm telling y'all some real shit. The 15 and the 16 level, and sometimes depending on the pair and depending on the circumstance, the 30 and the 35 level. As far as the downside is concerned, those are caps. So you see a price get to hesitating around 15, 16, 17. It can't get any more past that. 9 times out of 10, because it's getting ready to fall. It's getting ready to drop. It's falling through the. And if you know that it's supposed to be going down based off of whatever your analysis is, that's the perfect time. Get in. Because it's not going to go past 35. Facts. It's not going to go past 40, guaranteed, unless you're just wrong about your direction. If you're right about the direction and you see that motherfucker up at 16 or up at, really you want to see it at the 15, 16 level. That's really where you want to see it. But the max 30, you know what I'm saying? If you see it at these levels, these early levels, these 2 early levels, preferably the 15 and 16, then you good to go. Likewise in the other direction. If you see that bitch come down and it come down to the 85 level, or it come down to the 15 level, and it stays there and it can't break past there, 9 times out of 10, it's because the price is getting ready to go in the other direction. And usually when it's that type of situation, it'll stop around 30. It won't stop at the 16, 15, unless it's trying to be on some fake out type time. You guys will be able to tell, you know, the better, you know what I'm saying, the more experience that you get in, and when you know which overall direction the market is going, you'll be able to start to see the different maneuvers that come into play to grab liquidity. But those are 2 key levels that I want y'all to look for as if y'all trying to add to a position. Those are key times, those are key levels where you want to look to try and do it. But what you don't want to do is try and see a major resistance or major support broken at any time, even Asia anytime, and just jump straight in it. Because 9 times out of 10, it is going to curl back around. You're going to catch a huge loss. And then after it pulls all of y'all's liquidity, it's going to go back in that same direction. And you know what I'm saying? So don't do that. And that's how you guys be smart about your averaging into a positive position, right? I already told you guys, don't average into negative positions unless you know for a fact what you're doing. Usually that's based off of the fundamentals, Fibonacci and pivot points, confluences between them 2 indicators are usually great for that. Usually you would do that the night before around the same time, 5, 6 o'clock, you know what I'm saying? And then Europe will usually be the one you'll see it, like if it's gonna pull up before it comes down so it can grab liquidity and then go in this direction, that's when you usually, you know, but you gotta know what you're doing before you start moving like that. And so if that's not how you trade, you know, if that's not how you position yourself now, don't Don't try that now. Learn how to do that first. There's a way to do that properly, and it worked. And it's actually, I did it for many years and profited consistently. It's great, but you got to know how to set it up. And you want to look for confluences, and you only really want to put at the very most 3, but really just 2 for real. Like you want to like maybe get in initially, because sometimes it won't even retrace. It'll just go straight in that same direction, right? But then you may have one that's at like it's like the initial price, and then you may have one that's at like resistance 1 or resistance 2, depending on where the confluence between the pivot point and the Fibonacci lands at. You know, whatever level that is, whether it's resistance 1, 2, or 3. You know, then you'll put your second position there. Then you'll put your stop loss. You know what I'm saying? Like, give that space. If you're trading shit like euro dollar or some shit like that, nice 200 pip stop loss. You know what I'm saying? For you guys that are, you know, with the positions that are, you want consistency and predictability as much as you can. If you're just starting off, you know, nice 200 pip stop loss. And if you're trading into a news event, that's usually how you would trade into a news event. When you line yourself up with the fundamentals first, then you use the Fibonacci and the pivot points. You find them confluences the night before, right? You get one position in on the dot, and then you put another, because Europe is going to come in at 3 a.m. They're going to run the price in one direction or another hard, especially, and if they know that the majority of the market knows the price is supposed to go one way, 9 times out of 10, one of the two, Asia or Europe or both, are going to pull it in the other direction hard. Very hard to fake y'all out. Before then getting y'all's liquidity, running the price straight back down. Pivot points and Fibonacci are great for that, because it very rarely ever passes that R3, S3, and you can pretty much safely negatively average into a position that way. So I'm gonna leave that down. I don't make this video too long for you guys. You guys have any questions, you know what I'm saying, you know where to hit me up at. It's your boy Quint Warren, and I'll see y'all next video. All right.